Hi, this is Lara at Elliott Wave Gold with your daily analysis for Wednesday the 6th of May. I'm recording today's video 4:30 p.m. Eastern Standard Time, just a couple of minutes before. The wave counts still diverge. The bull count expects upward movement for a third or C wave. The short-term target there is 1237. The bear count expects a third wave down to begin to develop some very strong downward momentum. The target there is 1081, which may be about 7 days away. Volume continues to consistently support the bear count over the bull count, but while price doesn't tell us which one is correct, I will continue to consider all possibilities. To see the difference between bull and bear counts at daily and weekly chart levels, I link you back every day to prior analysis where I go over the weekly charts and I illustrate all of the little different points between bull and bear wave counts. I just want to focus on recent movement for the video to keep it at a reasonable length. The bull count expects a new cycle degree trend for a B wave. So far we have a 5, 3, would be expecting a 5 up at intermediate degree. Because intermediate wave A or 1 is a leading expanding diagonal, it would be very unlikely for intermediate C to also be a diagonal if primary A is a zigzag of this first movement up, because it's really unusual for both A and C waves within a zigzag to be diagonals. So if primary A is a zigzag, intermediate C within it is most likely to be an impulse. We could also label this intermediate 1, intermediate 2, intermediate 3, because primary A may also be a 5. A waves can be 3s or 5s. If this is an intermediate degree third wave, it may only be an impulse. What all that means is it's most likely we're going to see an impulse unfolding upward, so if we're seeing a leading diagonal unfold, it would be in a first wave position. This upward movement is a pretty clear three-wave structure. I wouldn't entertain any wave count that tried to see this upward movement as a 5. So that means if we're in a bull market, we have a leading diagonal unfolding most likely in a first wave position. Within a leading diagonal, subwaves 2 and 4 must be zigzags. Subwaves 1, 3 and 5 are most commonly zigzags, but they may also be impulses. So we'd have a zigzag for 1, a zigzag for 2 is a 0.67 correction of 1. That's within the normal range for a second and fourth wave of between 0.66 to 0.81. We'd be expecting now a zigzag most likely up for the third wave, but it may also be an impulse. At this stage for the bull count, if minuet C, this 5 down here, continues further, we'd label that 1, 2, 3, 4, 5. If it continues further, it can't move beyond the start of 1 below 1142.82. We need to see this invalidation point breached before I will discard the bull wave count. Price has to tell us which one's correct. For this wave count, would be expecting minute wave 3 upward, which must move beyond the end of 1. That's a core Elliott wave rule. If this is the start of a third wave, these two green candlesticks are the start of an upward trend, a third wave. Significantly, they are showing lower volume. If the trend from this point is up for a third wave, those two candlesticks should be showing higher volume, not lower volume. Volume does not support the bull wave count. It consistently continues to support the bear wave count, and that is quite suspicious for this bull wave count. It is a big concern. Let's have a look at how this possible third wave up may be beginning. We minute 2, would be most likely over here. If this is where minute 2 ends, this is where a third wave within a diagonal begins. So far, we could have a 5 up complete here for an A or first wave. Remember, minute 3 may be either a zigzag or an impulse, so the bull wave count must consider both possibilities. So we'd have a 5 up complete here. A 3 down may or may not be complete here. The problem today with the bull count at the hourly chart level is if we see this upward movement as a 5, although there are a couple of adequate Fibonacci ratios in there, there is a problem of gross disproportion. When we look for alternation between a fourth and a second wave, we should be looking for structure and depth, not duration. Although some corrective structures, particularly triangles and combinations, are more time-consuming than the very quick zigzags, you do normally see a somewhat of a difference proportion between a longer-lasting fourth wave, this one would be still a zigzag, but it has a big flat correction in here for the B wave, and a shorter zigzag for the second wave. The fourth wave is often more time-consuming. But it shouldn't be so much more time-consuming as to be grossly disproportionate. This one is 9.5 times the duration of the second wave. It's the proportion between a second and fourth wave within an impulse for Elliott wave, which gives an impulse a 5-wave look. When one of the corrections, either the second or fourth, is much, much longer than the other one, it gives the movement a 3-wave look. So it's the proportion between 2 and 4 which gives the right look to the wave count. And this one does not have the right look for this 5 up. This is too long in comparison to this for it to look like a typical 5. There's another gross disproportion within the third wave. This fourth wave is, I think, over about 5 times the duration of the second wave. Again, so much longer that it gives this movement a 3-wave look. That's a problem at the hourly chart level today for the bull count. If we take the possibility that this is a 5 up, then here we have A or 1, here we may have B or 2, but equally as likely we can move the degree of labelling here down 1 degree. This could be just subminuet A of a flat correction for B or 2. It could also be a subminuet W, a zigzag of the first structure of a combination. Because those possibilities certainly exist, we have to leave the invalidation point down here. If B or 2 continues, it can't move beyond the start of A or 1 below 1169.94. If B or 2 is over here, then C or 3 will reach 1.618, the length of A or 1, at 1237. That target would take minute wave 3 above the end of minute 1, would be seeing a leading contracting diagonal unfolding to the upside if the target is met, and that's where the third wave ends. The bear wave count sees the trend as still down at cycle and primary degree. And again, I link back to prior weekly and daily charts where I outline all of the differences at the daily chart level between bull and bear wave counts. There is much to support this bear wave count, and it does have some problems, which is why I keep considering the bull count. If we're seeing a primary wave 5 down, then at 957 it would reach equality in length with primary 1. It would have intermediate 1 and 2 complete. Intermediate 2 ends here as a big expanded flat. This is where intermediate 3 would have begun with a long extended first wave, a relatively shallow 0.4 correction for the second wave, it's a zigzag, and the third wave would have begun here at 1059. Minor wave 3 would reach equality in length with minor 1. They would both be long extensions. Within minor wave 3, we have a very short little wave for minute 1, an expanded flat for minute 2, breached the base channel drawn around minor 1 and 2. So I've created a parallel copy of the upper edge of this base channel and pushed it out to sit on the high of minute wave 2. If we see more upward movement, look for this trend line to provide the next line of resistance. If minute 2 is over here, then this is where a third wave has begun. We have a first wave down and another second wave correction. Volume continues to support the idea that the trend is down. If this is the start of a third wave, it is showing stronger volume, higher volume, and if these two candlesticks are a correction against the trend within a third wave, they should show lower volume, and the second candlestick toward the end of the correction should also show somewhat of a decline, and that's exactly what we have. We have a small inside day completing for Wednesday, and it's happened on an increase. Again, volume has increased beyond the 2 green upward days. That supports the idea that the trend at this stage for gold is down. Let's have a look at how minute 3 is beginning with the end of the first wave within it. Is this low down here from this low to this high at the hourly chart level? This movement does have a better overall look as a 3-wave structure than it does as a 5. We have a 5-3-5 zigzag. This does look like a B wave, and within subminuet wave A there's not such a gross disproportion between its fourth and second waves. We have some alternation, and depth most especially, and the proportion between microwaves 2 and 4 is reasonably close, giving this upward movement a pretty good 5-wave look. So this has a better look at the hourly chart level. For the bear wave count, it would be most likely that mini wet wave 2 would be over here as a zigzag and a third wave down would be beginning. The target for minute wave 3 remains the same at 1081. It will reach 4.236, the length of minute wave 1. That's the ratio I'm using in this instance because minute wave 1 is so short, and this target for minute 3 fits so nicely with the lower target 1 degree higher, minor wave 3 at 1059. Within minute wave 3, which may only subdivide as an impulse, we may have submini-wet 1 and submini-wet wave 2 complete here. If this second wave correction moves higher, it can't move beyond the start of the first wave above 1200.03. If we see this invalidation point breached in the short term, then for the bear count, it's possible that mini wet wave 2 was not over here. This may be just the first zigzag in a double zigzag. It could move higher, although I do think that's quite unlikely today. But if it did, it can't move beyond the start of 1 above 1215.20. If it did move higher, I would expect it to find pretty strong resistance and be extremely unlikely to break above this upper blue trend line I'm copying over from the daily chart. I will only have some reasonable confidence in this bear wave count if we see a new low below 1142.82. The bear wave count expects a very strong third wave down. To begin, we should see a clear increase in downward momentum, and downward days should continue to show higher volume. That's what we've got so far. We have lower lows and lower highs. Downward days continue to have higher volume. It all supports the bear wave count, but we need to wait for price to tell us definitively which one is correct, because that's a huge call. That's all for me today with your gold analysis, and I hope all of our members are having a fabulous day.